Nike is headed up by a CEO who came out of retirement last year. Investors like the message from the company today, even though it posted a sales decline in its latest quarter. Investors hope that moves by the CEO, Elliott Hill, will pay off. They include cleaning up inventories, unsold shoes and gear, apparel. Let's get more from David Swartz, Senior Equity Analyst at Morningstar. David, thanks very much indeed for joining us.
Good morning.
Interesting to see the sales decline continued at Nike, but the stock up today.
Yeah, it was a very difficult quarter, but that was widely expected. I had actually forecast a 15% sales decline, so Nike's sales decline was not quite as bad as people expected, but realistically, people were looking ahead to fiscal year 2026. People understood that the fourth quarter was going to be a very tough one because Elliott Hill, as you mentioned, has been implementing a number of plans to try to fix the business. It's called Win Now is the name of the effort, and it's been well known for the last couple quarters that this would require a large amount of inventory reduction at retail, which means a lot of discounting and declining sales. And the idea is that Nike will try to clear out some of its overexposed categories and product lines to try to make room for some newer products that are going to come this fiscal year and then afterwards.
So they went too heavily, it seems, into so-called lifestyle footwear, stuff that you aren't really supposed to use for athletics.
Well, it's always a fine line because Nike does sell to a large number of demographic groups, and people buy Nike shoes for many different reasons. They've had issues in a number of areas, including in lifestyle, but also performance too, where there's been some very tough competition from On and Hoka and some others over the last couple years. And so it's been difficult for Nike to actually manage its inventory properly over the last few years, and that's one of the reasons why a change was made at the CEO position. Nike had pulled out of a lot of retail partners in the last few years, and that really turned out to be a mistake. And so now Nike is trying to repair relationships with a lot of retailers to try to win back some of that floor space and shelf space that it may have lost in recent years.
So you do say we think Nike is very undervalued, but would you be a buyer of the stock right now?
Yeah, I would. I think Nike is probably worth over $100 a share, which is obviously a very high upside from the current price, even with the stock being up a little bit, because it's been near multi-year lows. There's been a lot of negative view of Nike. And that's quite a reversal from historically Nike has traded at a premium valuation. I think that Nike still has every opportunity to get back to the kind of operating margins that it had in the past. There's no reason that it really shouldn't, because Nike is still the number one sportswear brand in the world. It's number one or number two in just about every major country in the world. And it has all the advantages in terms of marketing and product development and that sort of thing. And it's still a very attractive market in sportswear. It's one of the few areas in apparel that really has strong growth and probably will continue to have strong growth for decades to come as more people move into the middle class and sportswear demand increases. So I do think that Nike will rebound from this current down period, and that this could be a good opportunity to buy the stock.
They're still struggling, though, in China?
Yeah, the Chinese market has been a very difficult one for Nike for different reasons over the last few years. And right now, China's economy is not very strong, and that's especially true for younger people. Youth unemployment in China is very high, and that certainly affects Nike because that's its target demographic. Unfortunately, Nike doesn't have direct control over its sales in China because most of its sales are generated through franchise stores, of which there are about 6,000 of them. And so Nike needs to work with those franchise partners to try to clear out their unsold inventory and try to generate traffic again in those stores.
Would Nike go in for M&A, do you think, try to rejuvenate itself by picking up other brands? I don't know. Is that the way they roll even? Do they buy other brands?
Nike has bought a few other brands over the years. It still operates Converse, which it bought about 20 years ago. But for the most part, Nike doesn't buy many brands. It has bought and sold a few of them. It owned Hurley, for example, at one time. But I don't see that happening. There's been no indication that Nike intends to do that. It looks like most of the cash is going to be used for stock buybacks and dividends.
And broadly, Europe, tell us how they do there. They face a formidable competitor in Adidas, for example, in that part of the world.
Yeah, they do. Of course, Nike competes with Adidas just about everywhere. And Nike is actually, I think, on the way back in Western Europe. The market there is not so bad. And I think Nike's actually ahead of where it is in North America and China in terms of inventory management in Europe. And it is an attractive market. It's still a market with a lot of sports fans, and, international football is as big as ever. And, we've got the World Cup coming up next year. And so, I do think that Nike plans to defend its market share in Western Europe.
Oh, that's interesting. Yeah, the World Cup coming up next year. So, some of the games in Mexico, Canada, and the US. I imagine we'll see Nike go full bore on that.
Yeah, Nike talked yesterday about some of their football cleats that they're working on, and they're going to be released over the next year, as well as football jerseys. So it's definitely a major effort for Nike, and they want to use the World Cup as a launching pad for a lot of those products.